The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we got a nice little turnaround in the grains and oilseeds on Tuesday. It was led by the wheat markets and some moderate strength in corn. The soy complex got a little bit of green on the screen there. Decent rebound in stocks. Energy's a little higher. And this livestock trade, this cattle market, futures continuing to stay red hot. Plenty for us to take a look at. Joining us now for market analysis and perspective, Jim McCormick with agmarket.net. Jim, it's good to hear from you again, my friend. Hope all is well.
Hey, good afternoon, Jesse. Thanks for having me on. I appreciate it. Yeah, all's well. Outside of Chicago here, with sun's out, we finally broke the freezing mark, and I tell you, it's been a dry winter snow-wise. I think parts of Florida and Louisiana actually had more snow than we've had here in Chicago. It's been kind of crazy, but a nice little break of spring just kind of tempting us here today.
Yeah, it might be the false spring number one that we get. You still got a lot of winter left to go for the Midwest. But to your point, I think New Orleans, I think someone told me earlier this week that they've had more snow in New Orleans than they've had in parts of, say, Minnesota this winter. So just goes to show some wacky weather we're having. And weather, of course, is a big driver in these markets right now, but it's mostly South American weather that's a talking point in the grains. And, we got a little bit of a turnaround Tuesday. It seems like the weather signals in South America are a little mixed. And, really outside of that, not seeing a lot of fresh news on Tuesday, although we know that another piece of this is headlines out of DC and more. There's a lot at play, I guess, is what I'm getting at here in these markets, Jim.
Yeah, there's no doubt about it. Let's start with the weather. The weather in South America, it's far from perfect. I don't think it's a disaster by any stretch. I mean, I'm hearing a lot of people put the Brazilian crop somewhere on that 171, 170, 171 crop. That is more than enough. The Argentina crop, it is down a little bit, Jesse, a couple million metric tons off the corn and beans estimates. But the fact of the matter is, if Brazil has this crop, it'll more than offset the Argentina crop in the long run. Corn's a little bit different story, and that's also kind of where we're at right now. The bean market has found some support on this weather story. I'm a little bit cautious about it personally, and the reason why I say that, Brazil is currently selling beans somewhere between 70, 80, as much as 90 cents cheaper than the United States. And the argument I'm going to make, folks, is plain and simple, is if the Brazilians are that worried about the size of their crop and the delay in getting their crop out of the ground, why are they selling it at a 90-cent discount to us? So I think that is maybe the canary in the coal mine for the long run for the beans. Right now, the world supply should be more than adequate as we start building through this harvest in South America.
Very true. Very true. Flipping over to the thoughts about headlines out of D.C., obviously, we're more than a week into the new Trump administration. You mentioned this to me before we went on the air, that the talk of tariffs on Canada and Mexico are real here potentially this weekend. And just that in itself, we saw the trade spat over the weekend with Colombia around the migrants and more. That just speaks to some of that extra volatility that these grain markets in particular are going to have to be watching out for here as we move forward.
No doubt about it. And, what we're talking about, folks, right now is the White House press secretary had just had a briefing here this afternoon, and she said at this time the game plan is for the tariffs to be put on Mexico and Canada on February 1 on Saturday. Now, what's interesting, Jesse, is there's two different dynamics I'm reading coming out of Washington on this tariff battle. The one wants to do kind of what President Trump did with Colombia and use the threat of tariffs to get what he's wanting. There's a group out of the administration that doesn't want to go that route. They want to put the tariffs on now and then use the tariffs and then negotiate the tariffs off, as opposed to use it as a threat. Which way is he going to go? This is always the fun part with President Trump. Just like in the first go around, you're just really not certain which way he's going to go. I am a little bit concerned about it, just because you mentioned about what happened over Colombia over the weekend about, that was a relatively minor spat, in my opinion. It really was about how the immigrants were going to get there. It wasn't would they not taking them. They've actually been taking immigrants all through the Biden administration. It was just more how it was going to do it. But you saw how red hot that went. that went from like a small simmer to a red hot boil within, a few hours on Twitter. And that just makes you very unnervous about it. We start slapping tariffs on Canada and Mexico. We're going to see some, they're going to push back energy prices. We get 6 million barrels of crude oil a day from Canada. Now, I know a lot of people say, well, we'll get it from somebody else. The fact of the matter is our oil infrastructure is built. Our refineries are built to take that quote unquote dirty Canadian oil. So it's not very easy to switch away. And the estimates are if they do tariff that oil coming in 25%, the price of gas is going to go up anywhere from 50 to 75 cents in the northern part of the country, because that's like where I'm at. We drive pretty much Canadian oil made gas. So we'll see what it is. Canada is also a big importer of renewable fuels, ethanol. So that could have a huge impact on it. Mexico, the cattle market, we'll dive into it. It's obviously going crazy. The cattle, the cow can actually jump over the moon, I guess I've been saying. I'm amazed about this cattle. But, think about all the feeders are not coming in because of that screwworm issue. Well, we're right on the cusp of bringing those cattle in. Well, this may change it. If he slaps a 25% tariff on all imports of everything coming across the border, guess what? Those cattle just became 25% more expensive for anybody who wants to bring them in. So, there's a lot of uncertainty, and we'll see. I mean, the one thing about President Trump is he likes to keep people guessing, and, we'll see if this actually comes to fruition. But as of the latest take, it sounds like the tariffs are a go.
So how do we manage our risk with all of this uncertainty? I think about, and this is across everything, livestock, grains, et cetera, particularly in the grains, corn, beans. We've seen a lot of farmers selling on the recent rally. These are some fairly actionable levels, old crop corn, new crop corn, beans, et cetera. Wheat's even had a little bit of a pop here off and on. I mean, just looking across here in general, how do you plan to manage your risk with all of this potential uncertainty that's out there? Any thoughts, any advice for folks, Jim?
Well, I'm going to put a quick plug here, Jesse. We have our conference coming up here in Nashville. And, the title of it's profit, not price. And I think this is kind of how you've got to look at 2025. Okay. You got to know your break evens. Be it livestock, be it grains. What does it cost you to produce that crop? That is key one. Once you know what your costs are, then I think you start managing that risk. Now, beans is much harder because right now beans aren't profitable for most clients for the new crop. Corn, it's getting a little bit closer depending on your input costs. Do you own the land? Do you rent? Stuff like that. But corn is there. So you got to manage that risk. And that's when you say, hey, if I have an opportunity, I believe, to lay off risk profitably, and maybe even a slight risk loss, maybe you use an option play. An option will put a floor down, but it doesn't guarantee you that sell, especially in the beans. You're saying, look, I might take a small loss in beans, but it's not going to be a large loss in beans. But you want to keep the top side open because of what's going on with the Trump administration, because of what's going on in the world. The bean picture right now looks very bleak, in my opinion, based on the world supply. Brazil has a normal crop. You're looking at an all-time supply record of beans. We're going to lose bean acres, and it isn't going to matter. But do you get a second phase trade deal or something like that where China buys lots of beans? That could change the dynamic. Corn, on the other hand, the world supply of corn is actually very tight of exportable supplies because the smaller crop we had, that was revised down in January. The Ukrainians had a small crop due to drought. So the world supply of exportable supply of corn, Jesse, is relatively tight. So right now, the corn market's profitable. You get up there, I'm telling clients, you better start laying off risk because we could go a lot lower with 95 million acres. But because the world supply is so tight, if our crop stumbles for some reason, or if the safrinha crop stumbles for some reason, you could see this market put another leg up as the market gets into that kind of rationing mode at the moment. There's just a lot of uncertainties. Now, I'm going to bring you back to the tariffs real quick, which gets confusing for a lot of people because, President Trump likes to straddle the tariff argument. Okay. If you saw what he did over the weekend, Jesse, that was a punitive tariff. Do what I want or I'm going to tariff you. Okay. And that's kind of what he's talking about with the fentanyl and stuff like that. But there's another part of the tariff argument we've got to look at is they're talking about using the tariffs to finance his tax cuts. The Secretary of Treasury, I think, was talking about starting a general tariff for everyone at 2.5% and then raising it each month. Because essentially, if you look at what the Republican Ways and Means Committee came out and said, one of their suggestions to finance the trade deficit, or excuse me, to finance the tax cuts, to finance no taxing of tips, to no taxing of Social Security, they want to collect one idea was to collect $1.9 trillion worth of tariff money to offset the lack of revenue. Well, I got to tell you, Jesse, we're going to collect $1.9 trillion in tariffs. Our tariffs are going higher. That's the only way we can do it. And the problem is, is if you're using that tariff not as I call it a stick, but as sorts of financing, once you put that financing into the budget, okay, you say, well, I'm going to use that tariff on that Chinese product coming in to finance the tariff. There's no negotiating the tariff away, because if you negotiate the tariff away, you're going to blow the budget out. And the far right budget hawks are telling the Trump administration they're not going to vote for these bills and this tax bill unless it's paid for. So there's a lot of uncertainties. President Trump has told the Republicans what they want. The question is, how are they going to cobble it all together? But I'm very cautious, because, like I said, it doesn't get the headline talk because of what they're doing with the revenue. But he has mentioned it multiple times about how tariffs are a great way, and he thinks it's going to be a way to finance the government. And unfortunately, folks, when we see tariffs, usually agriculture takes the brunt of the pushback, because we have an excess supply of grain and meat that we provide the world. And there are substitutes: Australia beef, Argentina beef, Brazilian products. Since there's substitutes, it's easy for some of the world to essentially shift away from our product. So there's risk. That is why I want to get back to the answer question. You need to mitigate risk and lock in profits, or at least manage that risk with some option play or something in case this gets ugly.
Jim, great perspective on that, and a lot of things to think about. I want to shift gears and talk about this red hot cattle market here. Just so impressive, really, for several weeks, months, last year or so. Beyond that, I mean, we're essentially at the 5-year mark of a bull market here in cattle, and setting history records last week, and just continuing to push this thing higher. Where does the buck stop, though? I think that's got to be a very big concern for a lot of folks here, is that, is anything going to slow down this freight train, so to speak, that continues higher, Jim?
Well, I'm not going to call the top, Jesse.
I don't want to call you, Jim.
I'm not that brazen, but the one I've been doing this for 30 years, okay? And sometimes, when you do this for 30 years, it gets, you can simplify what's going on, what drives the market. There's two things I believe that drive the market. It is fear and it is greed. And eventually one blows up at the top. I would argue we're in that greed phase, where the producer's like, he can't believe it's going to go up. And right now you're in the fear phase, where it seems for the end user, the buyer, from what I've been, they're fighting over these cattle. But that could change in a heartbeat. Chart wise, I did some head and shoulder targets, and on the April 210 or 212ish is kind of the target. I've come up with a head and shoulder top, but we're going to top when we're going to top. The one thing I'm worried about the livestock market, it has a history. The old line is, it's an escalator up and it's an elevator shaft down. And there is a lot of people, there is a lot of funds in this cattle market. And when the funds want out, it could get ugly. Now, what could change the fund psychology? Could be over the weekend on the trade tariff battle. If Trump comes in there and slaps 25% tariffs on Mexico and Canada, and then a 10% tariff on China on Saturday, and then they push back hard, kind of like what you saw going on in Colombia. And, Trump was, hey, it's 25%. It'll be 50% by the end of the week. This could get out of control real quick. And all of a sudden, you had incredibly high price of beef. You slap a 25, 30, 50% tariff of that stuff coming into China, coming into the rest of the world. Our dollar is high. The rest of the world's currency is low. All of a sudden, we lose those export markets. It changes. On the imports, on the domestic side of the equation, we are starting to see immigration raids. There was an immigration raid in the East Coast over the weekend. I believe it was a fish warehouse, and they did take several employees away. They're gone. That fish warehouse has now got less employees to handle the work unless he can find out someone to replace it. And it's very hard to find that labor. We could see that happen in, I fear, in our packing industry. There is a legit fear right now of people not even showing up for work due to even legal people showing up for work, due fear for what's going on. And I'm very nervous as you get something ugly like that, and all of a sudden we're losing a third of our kill capacity because of lack of workforce. All of a sudden, this all can end really quick, and you ring that bell, and those funds want out. It could be it could be a quick, ugly slide. That's where options, at least, hey, you put a floor under the bottom, but you leave the top side out open.
I think the moral of the story for our program today is just simply, whether we're talking livestock, grains, you name it, whatever the case is, it's just, again, managing that risk, because we cannot control a lot of these outside factors that could give us immense volatility, right, Jim?
You can't. I mean, and the reality is, you may like the new president's policies, you may dislike the president's policies. Our goal is to try to help you manage the risk. And right now, the markets don't like risk. Historically, when you get uncertainty, the market doesn't go up, it tends to go down. Weather's going to play the real key when it's all said and done, like it's every summer. We've seen a heck of a rally. I will fully admit it's going a little bit better than I thought, but the government gave us a gift. 3.8 bushel revision in January kind of shook this market up. But just remember what happened the last go around of the trade wars. That's the only thing I try to caution my clients, Jesse, is look, I don't know where this is going to go. I'm not going to try to pretend what I know what President Trump's going to do. And then I'm trying to guess how President Xi's going to react to President Trump. And then how Trump's going to react to President Xi's reaction. Those numbers, it gets so far out on that 3D chess, it's impossible. So what do you do as a producer? You say, look, if I have an opportunity to manage risk, I'm going to manage a risk. This is one of those years I think you want to stay flexible. Put a floor in, leave the top side open. You go to the cash market, you sell cash, you do forward hedges, maybe consider calls. It's one of those years I think you're going to want to have it play it in a way both ways, because you could see extreme moves that literally come out of the blue.
Good thoughts. And for folks who want to learn more, I know they can go easily online to agmarket.net. And also a final plug too, anyone who wants to make the trip down to Nashville here this upcoming weekend. You mentioned it earlier, your guys' Farming for Profit, Not Price conference. I know the lineup of speakers, the knowledge and more, Jim, you guys have a heck of a lineup again this year.
Yes, we do. It is this weekend. It's in Nashville. It starts Sunday afternoon at 1:00. We're going to have some economists. We're going to have some weather guys there. Weather is we didn't dive into it. We got some weather guys. I know they're a little bit friendly. They're a little bit scared about, looking at the dry fall we had, what that means. So I think there's a lot of information out there. We do have a few seats available. The best way to do it is go to agmarket.net, go to the top of the page, you can get a banner. And hey, as a bonus, Jesse gave me a plug. I'm going to give him a plug. Jesse is going to provide the entertainment for our cocktail parties. So if anybody didn't know, Jesse is a singer and guitar player, and we are pleased and very excited that he has offered to give us a little bit of mood music between our noon afternoon session of learning and dinner. So please, if you can make it, please come on down.
I'm looking forward to that part. You guys twisted my arm hard enough to make it happen. And to Jim's point, it's going to be a great time. So if you want a little last minute trip, again, more details, agmarket.net. Jim McCormick, always good to chat with you, my friend. We will see you in just a couple of days. Thanks for joining us here on the show today.
Looking forward to it. Thanks for having me on the show.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.